Yo, 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 what's going on, ladies and gentlemen? I hope you're all well. I sound like a frog. Simple. My voice is sort of starting to go, and that's probably because of the shouting and the ear chewing that I'm giving you guys during the live streams when I try and bring the fire to you. So I apologize if that is the case right now, ladies and gentlemen, but I'm going to try and get this video over to you as soon as. So listen, how to short Bitcoin. Well, what is shorting? Shorting is the concept that you favor lower prices. So here we go. Look at this range right here. This is a price range, all right? And we're going to mark it off like this. All right, that's the 40,744 zone. If you are going short, ladies and gentlemen, you favor lower prices. You want price to drop. So the idea is that you make an entry and you anticipate price to finish lower upon the close of your trade. Okay? But is it that simple? You see, 90% of retail traders come to the markets with the idea that when price is rising, the bulls are in control. And when price is dropping, it means that the bears are in control. Okay? But why is it after every big drop that happens, there is a sharp move back up? Well, we know what the story is, ladies and gentlemen, and you don't need me to repeat it to you, but I will repeat it to you because you need to understand the business model doesn't change. When price is rising, it's not because the bulls are in control. Psychologically, people are optimistic. In order for people to buy, there has to be someone to sell on the other side. That's Mr. Market Maker. He sells you his short. Why? Because you are there as the trusty retail trader screaming, I want to buy. Happy days. Mr. Market Maker, he's right there and he's smiling with his sinister look and he's saying, no problem. Here's your short, bro. Here's your short. As long as you keep buying, I keep building my shorts at the highest possible point so that I can sell it and hit your liquidations on the way down and release your liquidity. And guess what? Sell back to the other traders who are going short. Yeah, it's a crazy game, isn't it, ladies and gentlemen? You see, when you look at it from that perspective, right? When price is going up, always have your wits about you because they are marking price up. There's two phases. There's the markup phase and then there's the markdown phase. The markdown phase is when the Mr. Market Maker is preparing to go long. The markup phase is Mr. Market Maker preparing to go short. Now, when you look to the chart, you can see through the utility of the hybrid system, which includes these vector candles, we understand that the only way that price can move higher is if the market maker gives people the belief that price is moving. Yeah? Now, when price is moving, we are engaged to do something about it because we feel like we're missing out, which is why traders buy at premium, market makers sell at premium. It just does, you have to try and get it in your minds, ladies and gentlemen. You can't buy nothing. Do you understand? You can't buy nothing. You have to buy into something. You can't walk into an empty shop and demand to buy everything because the guy in the counter's got nothing to sell. So there's no market. That's why we need market makers. Because when we come to Binance or Bybit and we ask, can I buy $100 worth of Bitcoin at 100x leverage? Okay. He pings that order to Mr. Market Maker and he returns the liquidity back. Because when you're in a profit in a long, where's that profit coming from? Yeah, it comes from Mr. Market Maker. So when you pay yourselves, you are taking money away from the market maker. When you don't pay yourselves, your loss goes straight to the market maker. You don't just give people money. You're not just going to be, as a market maker, you're not going to be there just providing liquidity for people to make money. Nah, it doesn't work like that. This business is not designed for you to make money. It's designed for you to deposit as much of it as possible. More importantly, to get you to deposit by seeing these mad things happening when price is rising to the upside and an excitement takes place. This is where the hybrid system comes into play, ladies and gentlemen. We can understand the behavior of the market maker by understanding the way the candlesticks move, pulling off key levels in the chart, the sessions, the moving averages, all within the hybrid system. Now, if you are new to the channel and you haven't subscribed to the streams, make sure you do so you can catch up with the real-time development of the way Mr. Market Maker moves price. You can download the indicators free of charge. Just make your way over to the Traders Reality website, okay, tradersreality.com, and you can download everything there free of charge. Now listen, to finalize, how do you short Bitcoin? Well, we understand that shorting means you favor lower prices. What you want to avoid is you must, at all times, do not short at the lowest point. If the narrative is saying Bitcoin is going down, do not short at the lowest point. These poor guys down here went short, okay? Go and find the price book at 39,633. I can promise you're going to see loads of guys going short in that zone. Check this out. Here's the high block. $77 million worth of shorts were opened at 40,900. Another $81 million worth of shorts were opened at 40,600. Price was dropping. What happened? They came back and liquidated them. Look, the dashed lines no longer continue to the right of the chart. They've missed out. Yeah, look, they've eaten that liquidity by reversing price up. Look at these guys here. $60 million worth of shorts opened at 40,486. They got instantly liquidated. Because the business model doesn't make you think to sell at the highest point, but the law of economics says so. You don't buy a car to sell it at a loss. You buy it to sell it at a premium. You buy it at 100, you want to sell it at 200. You don't buy it at 100 to sell it at 50. Now, the only time you sell it at 50 is if you generally can't sell the car and you need to get rid of it as a quick flip. But the standard law of economics, the fundamental rule, when you buy low, you sell high. So why do people buy high and then sell low? Doesn't sit, does it, ladies and gentlemen? But that's not your fault. Because the context that is being delivered around the board and the education that is being provided about trading teaches you otherwise. It tells you, you go short when price is dropping. Yeah, of course you do. Well, look what happened to the shorts right here. They got liquidated. Look at the zone, 40,460. They got liquidated. Price came all the way up to 40,791. A $300 move wipes them out. It's right there. Look at these guys. 58 million, 40,292, liquidated. Look at these guys up here. 46 million, 81 million, 45 million. They all went long. Guess what? They got liquidated. $188 million worth of longs. You see, this is why I say pay yourselves, ladies and gentlemen. The guys that entered here at 42,356 saw a nice $1,000 move nearly to the upside. Why on earth would you not pay yourself? Look what happened. They smacked it all the way down again. These guys thinking, that's it, yeah, baby, I'm going to the upside now. I've got a nice liquidation point. Well, guess what? Bitcoin comes straight back down to those zones. That's the sad truth. Yeah? Now look at these guys. This is important. These guys went long from here. Happy days. Did you pay yourselves? Well, look, 46 million and 29 at 39,933. That's how many people went long. These are the liquidation points. Okay? Down here. So where is it? So 46 million is there. So that is, there it is. That's the liquidation point for those 100x traders. Okay? Next to it is the 87 million. So this is the liquidation point for those traders. And these are the liquidations for the 50x traders. So 100x and then 50x and then 25 down below. Look what price is doing. It's coming back up, eating the liquidity for the shorts. There you go. Because guys went short in this zone. And the business repeats itself over and over again. So when you do decide to go short, ladies and gentlemen, the skill is understanding if the move is rising, okay, what is Mr. Market Maker in essence preparing for? Because Bitcoin on the 15-minute time frame looks like it's collapsing, all right? But then when you look at it on the higher time frame, things look like they're okay because they haven't broken key notable areas. The rise up, consolidate, rise up, consolidate, rise up, quickly take some profit, stop hunt rise, drop to the downside. Sorry, ladies and gentlemen, my voice is actually on its way out. Listen, I hope that puts things into perspective for you, all right, and you understand what I'm trying to convey here. When you go short, you do not go short from the lowest point, okay? And it's distinctive, because when you see price aggressively hitting the lows, it's the market maker trying to trap you to open that short, because you know he's going to smack it back up in the range, okay? Notice, and go back in the charts and try this out, ladies and gentlemen, all right? Go back in the charts and find every attempt to move price down lower. It works in threes. Look, vector candle 1, 2, 3. Vector candle 1, 2, 3. Yeah? Vector candles 1, 2, and 3. I include that one, not this one, because this one was more. All right? Go back in the chart. Train your eyes to visualize this behavior. 1, 2, this zone. And then finally, these vector candles here, 3. They still reversed. They came back up. They had trapped enough traders in that zone. Go again over here. Presence of 3. 1, 2, 3. Shift back out. The trap. Here is what psychologically what is happening. Oh, Bitcoin's starting to drop. I'm going to wait. Ah, man, I could be missing out on a big move. Okay, I'm going short, man. 3 hits to the low. That's what I want to see. It's going to break. Yippee-ki-yay to the upside. They are given reasons to go short. And the reason it snaps back up is because these guys have been placing orders. Okay? The same goes for longs. 1, 2, 3, reverse. 1, 2, 3, sideways, come back down, shift out. 1, 2, 3, reverse. It's easy talking in hindsight, but if you didn't watch this video, you may not have seen it if you are new to the channel. And it's going to put things into a lot more perspective. So when you do start to see price dropping down, you'll be waiting for the presence of 3 hits to the low. 3 hits is what you want. Now, it doesn't always come so cleanly, ladies and gentlemen. So look, here's an example right here. You've got price. It looks like it's starting to go down. You've got one cluster here, another cluster, and then this big one right here, which leads to the retrace. If you want to see this retrace happening in real time, where we were talking about it in real time, go to the stream on the 13th of March. It was a live stream on a Sunday, and we were saying that we are now waiting for the retrace back up, and it worked its way through. Because the shorts had been triggered. People were going short from that point. I'll be going live today, ladies and gentlemen, at about 2 p.m. just to bring in the New York session, depending on what the situation is. But then I won't be streaming this evening, ladies and gentlemen, okay? And I'll be doing a video over the weekend to prepare you guys for what to expect moving forward from there. Mad love and respect, guys, and be sure to like and subscribe. And I will catch up with you again very soon. Take care of yourselves, family. Peace.